when you're in a large organization and your team needs you to be there, you have to really show up as a leader.
Welcome everyone to a new episode of The Blunt Dollar. Today we're joined by Lori Heinel, the Global Chief Investment Officer of State Street Global Advisors, one of the world's largest asset managers, overseeing more than $4 trillion in assets. Lori has built an impressive career over 41 years in finance, leading investment teams across multi-asset strategies.
The most important thing that we do is we deliver investment outcomes for our clients. Finance isn't just one thing. It's not just portfolio management, right? It's marketing, it's sales, it's compliance, it's operations, it's portfolio management, of course. Almost no matter what your skills interests are, you can find some way to be in this industry. I spend a lot of time with my team on is how are we thinking about the skills that will be required for us to be successful in the future, and how do we make sure that we're readying our workforce today for that future.
This is The Blunt Dollar with Ignacio Ramirez. Quick disclaimer, the views and opinions expressed in this podcast are those of the speakers and do not constitute financial investment or legal advice. This content is for informational and educational purposes only and should not be relied upon as a substitute for professional advice. Always do your own research and consult a qualified advisor before making any financial decisions. All investments involve risk, including the potential loss of capital. And now, let's get started with the episode. Welcome everyone to a new episode of The Blunt Dollar. Today we're joined by Lori Heinel, the Global Chief Investment Officer of State Street Global Advisors, one of the world's largest asset managers, overseeing more than $4 trillion in assets. Lori has built an impressive career over 41 years in finance, leading investment teams across multi-asset strategies, factor investing, ESG, and macroeconomic research. She's been at the forefront of how institutional investors shape markets, navigate risk, and adapt to change. And today we'll tap into her insights on leadership, investing, and the future of asset management. We'll talk about what it takes to lead in finance, how institutional investors influence the investment landscape, and the progress and challenges of diversity in asset management. We'll also explore how AI and technology are reshaping investing and what that means for the future of portfolio construction. So whether you're a finance professional, an institutional investor, or just someone curious about how the biggest players in the industry are making decisions, this episode is packed with insights you don't want to miss. Lori, welcome to The Blunt Dollar. It's fantastic to have you on the show.
Thanks for having me. Really glad to be here.
So maybe before we dig into all those topics, can you tell us in a couple of words, what is it that you're doing exactly at State Street as the Global Chief Investment Officer?
Well, as the Global Chief Investment Officer here at State Street Global Advisors, I'm responsible for a team of over 600 people who do everything from portfolio management, research, and trading to engaging with our clients and making sure that we can deliver exceptional outcomes to them in their portfolios.
So 41 years in the industry. I mean,
You're
that's
making me sound old.
no, not at all. I'm incredibly admirative. I very rarely talk to people with so many years of experience, and maybe I'd like to hear a bit about your path and how did you go from just I guess an intern in the finance industry to being the CIO of one of the most important finance institutions in the world.
Well, I would like to say that it was all planned, but as you can appreciate, a career that spans multiple decades always has a few twists and turns along the way. But I would say I fell into finance really by accident. I was a liberal arts major at undergraduate university, but when the time came that I was graduating, I really needed to find a job. And at the time, finance careers were very lucrative and very attractive. And so I was fortunate enough to secure an analyst position at one of the premier investment banks at the time. And then that really led me to catch the bug. I got really interested in markets, in finance, in solving client problems. And then throughout my career, I took a variety of roles that were always in the finance space. I've run product. I've been involved in research processes. I've been involved in, all kinds of development efforts. And I think that sort of journey positioned me quite well when the opportunity here at State Street arose.
Mhm. So for our listeners, maybe could you describe in a couple of words what does a day in the life of a CIO like you look like?
Well, one of the things I love about my job is that every day is different.
Mhm.
So, obviously, there are threads. As I mentioned at the outset, the most important thing that we do is we deliver investment outcomes for our clients. And so, job number one is to make sure that we're actually delivering that. And as you probably can appreciate, we run a variety of strategies. We have a very large index book. And so, making sure we deliver the exposure that that client has hired us to manage is critically important. But we also have a number of active capabilities where, looking at how we're doing from a risk return standpoint is really, really valuable. And so I spend a lot of time just sort of looking at where we are, what we're doing to make sure that we can deliver upon those outcomes, and where there are challenges, understanding what might be driving those. I think the other thing, though, is that it's a very eclectic day because I might be visiting with clients and talking to them about what we're doing. I might be dealing with talent issues. And as you can appreciate, this is a talent business. So everything from hiring to developing to making sure our employees are motivated. A lot of projects. I mean, your audience has probably seen that we've been doing a lot of innovation here at Global Advisors, and so the role that investments has to play in collaborating with our chief product officer, our chief business officer, and our client-facing teams to do that innovation. So lots of things are on my plate in a given day, and then oh by the way, all the extracurriculars. What's going on with the Fed? What's going on with world geopolitical issues? All of those are things that I have to stay on top of as well.
And on top of that, podcast like this one. I mean,
Yeah,
it looks like your
exactly.
day has like 48
Exactly. And
hours
sharing my
instead of
journey so others
24.
can benefit.
So how would you define your leadership style? Because I mean, you clearly manage hundreds of people, not an easy task. What is your leadership philosophy, and has it evolved over the years?
Yeah. Well, first of all, it's evolved a lot over the years. As you can appreciate, like probably so many listening to this podcast, I'm a very hands on person. So in my early career, the idea of delegating was really challenging for me because I
Mhm.
always thought if I needed to have it done right, it had to be done by me because I was going to do it the best, right? But as you can appreciate, as you grow in your career and take on more and more leadership responsibility, you really do have to adapt and make sure that you have the right team in place, that you trust those individuals, that you have their backs, that you give them the empowerment. So I would describe my style today as trust but verify. And by that, what I mean is I've obviously got a fantastic team and I work very hard to make sure that they have what they need. But there are times when I need to get in there and just, regurgitate, what's going on and make sure I have a deep understanding because if problems arise, I want to be able to understand what those root issues are and help them problem solve. So I'm pretty hands off, but I can also go deep when the moments necessitate that.
Mm. And something I wanted to ask you about is how you deal with pressure, because investment management is obviously inherently high pressure, especially at the institutional level, right? Like, and leaders often deal with market shifts, with client
Yeah.
expectations, and internal strategy decisions that impact not millions but billions of
Yeah.
dollars, and even
Yeah.
trillions in your case.
Yeah.
So, how do you manage pressure and maintain clarity in high stakes decision making?
Yeah. Well, look, that's where I've been on a long journey as well. My natural temperament is to, be a bit reactive, right? Oh, geez, what just happened? But when you're in a large organization and your team needs you to be there, you have to really show up as a leader. And so I guess the first thing I try to do is take a breath. you know, we just heard something bad happen. Okay, take a breath. Um, Second thing is put it into perspective, right? Are we talking about something that's really damaging? Are we talking about something that's a little bit of a setback? Are we talking about something where we can solve the problem, with a few people getting together? Or is this something that's much more pervasive? So try to move into that problem solving kind of modality. The other thing is like communicate, like make sure that your key stakeholders know what's going on. Make sure that they know that you've either got the ball or that you need their help to get something addressed and that everybody appreciates what their roles and responsibilities are. And then once you're out of that crisis mode, take that step back and digest what happened. so that you can make sure that that thing doesn't happen again, that you put in place the right kind of mechanisms. And then the last thing I would say is just personally, like I'm a big exercise fanatic. I like to get to the gym. I like to do outdoorsy things.
Mhm.
So I think the other important thing here is you've got to give yourself space to recover, right? You're going to be in those moments where you're all in, everybody's very stressed out. You're trying to manage how you're showing up as a leader, but you're also trying to make urgency and get things addressed. And then you need a little space for yourself because you have to recover from that situation.
Mhm. Yeah, if a lot of times people ask me like, "What's the number one productivity hack?" and I always tend to say what you just said, like, do sports, go back to the basics,
Yeah.
sport, and then eat well and sleep. And if you do these
Yeah.
things, I can guarantee you're going to be 100 times more productive at work and in
Yeah.
life in general. Um,
Definitely.
so I'd like to now talk a little bit more about the influence of institutional investors in the
Hmm.
investment landscape. Um, First of all, like basic question, I guess, but how do institutional investors like State Street differ from retail investors in the way they approach investment decisions? What is different?
Well, as a global asset manager, we deal with clients across all of those different channels. So we have everything from very, very large sovereign wealth funds and defined benefit plans and other institutional asset pools. But we also serve as advisors, consultants, ultimately end clients, 401k plans that have end participants, et cetera. So we kind of see it all, if you will. And I would say there's some things that are quite common. I think for the most part, all clients are trying to put together a portfolio that's going to give them the best opportunity to achieve their long-term goals. But I think there are also sensitivities that are different in different client types. And I would say to think about it as institutional versus retail is not necessarily a helpful construct, although I would agree that there may be some differences. But I think it's more on, what the sort of psychographics of those clients are. So some clients are just more risk sensitive, right? And that could be large institutional clients where there are real issues that they have significant drawdowns in their portfolios, or it could be retail investors who are late in their 401k cycle where they're going to go into retirement. They're going to have to draw down, and at that
Mhm.
point in time, have a market correction is very, very damaging. I think there are also some clients who are just more willing to focus on opportunistic and growth oriented kinds of capabilities. And then I guess the other thing that I would say is that sometimes there are just other frictions, like some clients don't have the right kind of governance structure around their decision making. Some clients are constrained by what they're allowed to do. Some clients have, regulatory limitations. So the good and the bad thing about being an organization like State Street Global Advisors is that we see clients who have all kinds of ambitions, but also all kinds of constraints, and being able to work with them to customize what's right for them is the common thread.
And talking about the good and the bad thing, I mean, you're managing $4 trillion in State Street. So, what are the biggest advantages and what are the challenges of managing assets at such an enormous scale? I mean, it's just
Yeah.
huge.
Yeah, well, look, I think the first thing is, as you noted, we are a scale provider, so that gives us incredible efficiency opportunities, and we really have seen. If we haven't seen it all, we've seen a lot, right? And so it puts us in a really good position to advise our clients and deliver them to them on a daily basis. The other side, though, is it's quite complex. So across that $4 trillion, as I noted earlier, we have a large book of indexing business, but that spans all kinds of exposures: equity, fixed income, large cap, emerging markets, very niche fixed income asset categories, et cetera. But then we also have a large book of asset capability, or excuse me, a large book of active capabilities, multi asset class solutions. And as you probably also know, we partner with a lot of third party advisors to bring products to market where we may not have our own expertise, but we think clients would benefit from having those kinds of exposures. So part of the challenge is just being able to make sure that our clients have a full awareness of all the different ways we can help them, and that we are managing that entire ecosystem in a way that is really valuable to those clients. And as CIO, as you can appreciate, I've got to make sure that all those capabilities are fit for purpose for our clients.
Absolutely. And you were just talking about one of the parts of your business, which is passive investing, which obviously has taken over a large portion of the market over the last years and decades, I would argue. How has the rise of passive investing impacted the way you manage portfolios internally, but also like institutional investors in general?
Yeah. So I think there are a couple of trends in index investing. And we purposefully don't call it passive because there's nothing passive about index investing. It's actually quite technical and difficult to do. But the first thing I would say is that for a lot of clients, it is the best, most cost effective way to access a market. And so we've seen the rise of equity indexing in particular over many decades now. And then in more recent years, we've seen more and more clients looking at fixed income indexing rather than hiring active managers. So that's a trend that we see persisting because it's efficient and it gives investors kind of what they're looking for. The other thing that we've seen, though, is that index is becoming even more precise. So, once upon a time, you just bought, the S&P 500 or the MSCI World and you called it a day. Well, increasingly, investors are fine tuning that. So they might want to look at regional allocations or sector allocations. And so they might get an index exposure that's very stylized. And then we'll often see investors doing a little bit more asset allocation across the top and even adding some tactical plays on top of that index set of capabilities. And then I think the third thing that we're seeing, which I think is really interesting, is the evolution of indexing into spaces where maybe you wouldn't have expected to see indexing. So, whether that be in more exotic fixed income exposures or alternative asset classes, that's also becoming a trend that we think is very, very durable. So, we try to talk about as not indexing or active, but really having a full toolkit and taking advantage of what the index exposures can give you, coupled with other things that you might be doing, like tactical or including other active exposures.
Yeah, by hearing you, I have the feeling that the same way the days of a CIO are never the same. The days of passive and indexing
Hmm.
are also constantly evolving, and
Yes.
with the arrival of new technologies and regulatory changes and
Yeah.
investment themes, like it's constantly moving. It's and I guess that's what makes it really really exciting.
Yeah, and if I could just jump in, you sort of provoked another thought in my mind, which is this idea that clients want increasingly customized kinds of things as well, right? And so, what we've seen on our institutional client base, which I think is starting to come into more of the wealth channels as well, is this idea of customizing by either instead of a cap weighted index, do more of an equal weighted index, or try to create something that's a little bit more volatility controlled, or maybe remove certain exposures from the portfolio or add more exposures to the portfolio. So I think this idea of getting things that are more customized to clients is a trend that's also supported by indexing, actually.
I was planning to talk about that a bit later in the conversation, but since you brought it up, I think we're gonna jump right into it, which is a bit like the future of asset management, and particularly
Hmm.
now with the arrival of AI. What do you see as the biggest forces reshaping asset management today? Do you think it's this trend towards personalization that we're gonna be seeing most about, or do you think there's other bigger things happening at the moment?
I think there are a lot of things. I mean, certainly the trend towards personalization is intact and it will continue to grow. We have seen, things like model portfolios, but model portfolios that are sort of allow for certain amounts of customization is very, very common. Trends around direct indexing, for example, again, allow clients to access markets, but do so in relatively stylized ways. Here in the US, obviously, tax aware investing is something that's been in vogue for a very, very long time. We also have certain clients that want to integrate things like sustainability into their portfolio. So that idea of customization is, I think, something that's with us probably for the rest of my career for sure. I think the other thing, and it sounds a little trite, but we talk about this idea of the democratization of investing. So, you started with a question earlier about the differences between institutional and retail or wealth investors. And I would say one of the differences is oftentimes institutional investors have options available to them that may not be available to the average investor. And you think about things like alternatives, private equity, private real estate, infrastructure, direct distressed debt, things of that nature. And increasingly, those exposures are able to be captured by broader audiences through vehicles that have really democratized the investment landscape. So I think that's a trend that you'll see going further. And things like blockchain and some of these other technologies, digitized finance, enable that to happen in a much more sort of widespread way. So I think that's another big trend. And then the last one I would cite is one I was talking a little bit about earlier. This idea of solutions and really not just customizing the portfolio, but customizing the solution, right? So if you're in a target date fund, for example, that's a one version of that, right? That as you kind of progress along your career, your portfolio adjusts based on your then current tolerance for risk and reward. But you can apply that to lots of other scenarios too, where there might be very stylized things you're trying to do in the moment, whether it's controlling the volatility of the overall portfolio or trying to eke out incremental return.
And since we're talking about the future, obviously we cannot talk about this without using the big buzzword at the moment, which is AI.
Yeah.
A couple of years ago, everyone was talking about ESG in every single earnings call
Yeah.
you dialed in. It was the big word. Now it's all about AI. I'm curious to hear, how is AI currently being used in institutional asset management, and where do you see its biggest impact in the coming years? Hey there, quick favor to ask. If you enjoy the blunt dollar, the unfiltered takes, the stories, and the laughs, the easiest way to support the show is by tapping that subscribe button right now while you're listening. And here's my promise: if you do, I'll keep bringing you honest conversations, fresh perspectives, and the kind of finance talk that's engaging, insightful, and worth your time. Thanks so much for being here, and let's keep these great finance conversations going.
Yeah. So the first thing I would say is we are big believers that AI is a technology whose time has arrived in a lot of ways, and it will significantly impact really everything that we all do over the coming decades. Um, There are a couple of different ways that we think about this. First of all, it is technology that we deploy within our own business for a variety of things. So we've been using, natural language processing and machine learning toolkits for years, and we've continued to evolve that to create signals within our portfolios, to be able to pressure test ideas. We're increasingly looking at ways to leverage these tools to do other kinds of efficiency, almost like the research co-pilot, to be able to digest information out of research papers, translate that into some form of code, test hypotheses. All those things can be very, very efficient when you leverage AI tools. The other side of it is looking at it from a how's this going to change other companies, right? So we're an active manager. We're curious about how AI is being deployed in our portfolio companies to say, okay, if you're in pharmaceuticals or you're in the, energy company or you're a consumer goods company, how are you deploying AI tools? People are starting to wake up to the idea that this is not just AI for AI's sake, but it actually is game changing for companies that deploy AI in a smart way.
Yeah, I like to think about it as not a winner takes all kind of
Right.
scenario, but a rising tide type of scenario where everyone
I think that's
benefits.
fair. Yeah, I think
Yeah.
that's fair.
So I'm a fixed income advisor, and I am a little bit worried about my job in 5, 10 years down the road because of AI. I'll be honest. I'm an optimist by nature, but I think that for sure the skill set required from finance professionals in the future with the rise of AI is going to change. So how do you think the role of portfolio managers, investment analysts, and so on is going to evolve as AI becomes more integrated into asset management and the finance industry in general?
Yeah. So first of all, I don't think your job's at risk at all. And I will go back to my beginning. I was a liberal arts major, right? So I came into a very highly technical business with a background that was not necessarily highly technical. I mean, I had some math skills. It wasn't like I had nothing, but I say that because I think it's a marriage of man and machine or person and machine, not that suddenly the machines are going to do all the work and we're going to have nothing to do. I think there's still a lot of space for, what's the idea generation in the first place? Like, what do you want to actually test? Like, we go through these, research idea seasons where anybody can throw an idea out there. And oftentimes the best ideas come from people who are the non technicians. So I think it is this, changing the nature of what we need in our workforce for sure. We may not need people who are deep in the writing of the code, but what we do need is people who can think, who can interpret the results that come out of that, who can translate that into real world, outcomes for investors. So I'm not as nervous about the future, but I think like every industry, if you're standing still, you're going backwards. And so, one of the things I spend a lot of time with my team on is how are we thinking about the skills that will be required for us to be successful in the future? And how do we make sure that we're readying our workforce today for that future?
Mm. There's an analogy I love from the world of chess, which is so the best chess player in the world apparently is not a human, it's not a machine, it's a group
Hmm.
of humans that work with a group of machines, and that player is known as a centaur. And I
Right.
think we are at the cusp in the finance industry of a new era where we're going to become finance centers.
Yep.
And I could totally imagine myself in 5, 10 years down the road doing a lot more with the help of the machine. So maybe I'll be
Yep.
covering more markets, more asset
Yep.
classes, more
Yep.
clients. I'll personalize more, and I think the important thing is to have like an open mindset,
Yep.
keep learning, and become part of the change rather than just staying oblivious to it.
I agree. And you said something else I think there that's fairly important. This idea of how do you collaborate effectively with others? I mean, one of the things you asked me earlier in this conversation was, my leadership style and how I've grown. And I commented that, in the early days, it was like, I want to do it, right? I can do it. And as you get more experience and have more responsibilities, it's more the we can do it, right? And what you just described is this is the ultimate we, right? That now you have all this great AI technology that can support your journey, but it ultimately is bringing that with the people and valuing all the different perspectives that those people bring to the table as you're sort of navigating that new ecosystem.
So, if you had to give one tip for the finance professionals that want to survive in the age of AI in a one liner, what would it be?
Intellectual curiosity. I
There you
don't
go.
think AI in the short term, at least, maybe someday when we have, general AI, generative AI, maybe it will. But I think the people that I see thrive throughout my career, and I believe will continue to thrive into the future, are those people who are always asking the what and the how and the why questions, right? Intellectual curiosity, noodling on that, being able to think about how that changes what you're doing today, but also what you might do tomorrow, and being very expansive. And the other people that I really admire in this industry are those who kind of are the connectors, who see something, think in a sort of bigger enterprise way, and connect the dots in ways that ultimately drive better outcomes.
I fully agree with you. I mean, I think connectors and soft skills in general are
Hmm.
like completely underrated skills. One of my
Yeah.
personal objectives for 2025 is to get better at storytelling. Can you maybe
Yes.
tell me a bit about that? How do you think as a CIO about storytelling? Because that's like a huge part of your job.
It's so important, and this is another area that I feel like I've grown, but I can continue to grow, right? In earlier in my career, it was all about the facts, right? I would go in front of my team and I would tell them the facts. And then I started to get feedback that that was interesting, but it wasn't really keeping people's attention or it wasn't really compelling. And then I would find situations like maybe like this where I would do an impromptu session on a panel, or I'd be doing an interview, or I'd be doing an early version of a podcast or something, and I would be a little bit more loose. Like I'd be a little bit more not so worried about being perfectly prepared and sharing those experiences that I had in an authentic way and sharing some of the reasons why I do what I do. And suddenly people are like, wow, you have something really interesting to say. I was like, well, I'm saying the same stuff. So I think that just as humans, we respond to not just the facts, but kind of what went into that? How did you feel about that? How did you react to that? What would you have done differently? Like those are all really important things and they help us grow and learn and work better and trust each other.
Mm. So talking about feelings and empathy, I think that's an excellent transition to another part of the conversation I wanted to have with you, which is women in finance.
Hmm.
So women are notoriously known for being a lot better than we when it comes to being empathetic, and I think there's many studies that show that the average emotional intelligence of women is way above ours. Yeah, the finance industry has traditionally been male dominated, but we've certainly seen some progress in bringing more women into leadership roles, and I think you're obviously an excellent example of that. But my question is, from your perspective, how far has the finance industry really come in terms of gender diversity, and what progress still needs to be made?
Yeah. So I think we're on a journey, like so many things. But what I would say, first of all, is the most important thing is that diversity does matter, right? Diversity in many, many forms. And it can be things like, gender or other identity characteristics, but it's also just ways of thinking and, ways of operating and behaviors and emotions and all those things. So we really do take to heart that we want to create an engaged environment where we have a diverse set of people who are working on problems and who can feel as though they can bring their whole selves to that problem,
Mhm.
right? So you want to create an environment that's safe and that enables people to express all of who they are because all of that together is what ultimately will make us better. What I would also say is that part of the thing that we've tried to navigate is it's always got to be meritocracy, right? Like we're in a very competitive business. And so we need the best talent and we need the best talent operating at the highest level. So this idea of just thinking through the lens of diversity, it always has to be grounded in we want the best talent. But what you also see in the academic studies, which I'm sure you're familiar with as well, is that sometimes diverse teams actually don't feel as comfortable for people because folks tend to gravitate towards people that are more like themselves. But the outcome they deliver is better because you have that diversity of thought. So there's this kind of
Mhm.
tension that you sometimes see in the academic literature where more homogeneous teams like their environment better or they feel like more comfortable, but they actually don't do as well as heterogeneous teams. And we've seen this in a couple different varieties. There's studies that show that more experienced people coupled with less experience do better than all experts. We've seen the teams that have diversity. So I think diversity is a topic that we just need to keep leaning into because it delivers better business outcomes. And then the last thing I would say is part of what I try to do is kind of look beyond somebody's experiences when I do hiring. Obviously, experiences are important, but if you only look for people who have a certain kind of experience profile, you're pulling from the same candidate pool that everybody else is pulling from. And if it's really a war on talent, part of my job is to find other candidates that might be able to do the job as well or better but broaden my candidate pool. So we focus more on competencies, potential, some other elements in addition to experience, and we found that that helps us widen the candidate pool.
Yeah, that's a very smart approach. Finding also diamonds in the rough and looking in
Yeah.
places maybe where others are not looking. And what you
Hmm.
said before about homogeneous teams almost also made me think about confirmation bias, which we see a lot of
Hmm.
in markets, right? But you want to be exposed to people with different ideas and to think about things from a different angle if you really want
Yeah.
to progress and move forward. But so you've clearly navigated a very competitive industry, and you made it arguably to one of the most senior positions out there. Um, but I'm sure, like many of our listeners, particularly women in finance, will be looking for practical insights on how to advance in their careers. So I wanted to ask you, what are some of the biggest challenges you faced as you moved up in your career as a woman, and how did you overcome those challenges?
Right. So sometimes the challenge that women in particular deal with the most is like know thyself and don't limit thyself, right? So again, there's a lot of academic literature that suggests that women are less likely to raise their hand for opportunities unless they feel that they have all of the capabilities required by the job, whereas men are more likely to raise their hand even if they feel like they have, half the qualities required for the job. So I think women have to be sort of self advocates and be a little bit more willing to raise their hand. And I would say that's true for men too. So this is not just because there are lots of men that I've worked with throughout my career who were also maybe a little bit less willing to put themselves out there. So number one is, advocate for yourself, have confidence in yourself, and recognize that, part of the benefit of a stretch assignment is it's a stretch assignment. It's going to let you learn some new skills that you don't already have or that you haven't already mastered. I think the other thing, to be just really blunt, is sometimes you have to recognize you can't have it all. It doesn't matter, whether you're a male or a female. When you want a senior position, it's going to require commitment. It's going to require that sacrifices. It's going to require that maybe you won't be able to go to all the soccer games or the school plays or whatever it is. And I have two children who are grown now, and I'm sure at the time they would have said, at times that I was a terrible mother because I didn't show up for whatever event it was. But that's part of the contract, if you will. Now, you can have good work life balance. And I think, certainly I would argue that, I have that balance and that my employees can take advantage of that balance. But it is a consideration, and sometimes it's not the right thing at that time. And how do you make sure that you can stay on the track so when the time is right, you can reaccelerate? And then the last thing that I would say is that try new things. Like be don't be afraid to take risks, because as I mentioned earlier, my career was a bit more jagged. It was always in finance, but I did a variety of different kinds of things, and um, it took a little bit of risk taking to say, yeah, I think I can move from being in investment banking to being in trading, or geez, maybe I can move from trading into product, or I can move into, you know, specialized sales or whatever. So I think there again, you've got to have that mindset that you're willing to experiment and be intellectually curious and try new things.
I love that. That's a great philosophy. So that would be tips for maybe the people that are already in the industry. But what can we do to encourage more women to pursue careers in asset management? Actually, to join the finance sector.
I think there are a couple things. There was a study done. This is many years ago now, so I hope it's changed a bit. But it was a study where individuals were asked like what careers they admired the most, and finance was very, very low. And it always surprised me because I think about what we do in finance, right? Like we empower people to fulfill their financial ambitions, right? We really do focus on investors and the clients. It's a very client centric business. It's a very people centric business. So when I think about the women that I know, if you ask them, what kinds of things would be attractive to you, they'd say, I want to solve problems for the world. I want to solve problems for people. I want to, help people be secure and safe and, have financial success. And like that's what we do. So I think part of it is maybe marketing. Like maybe we just need to do a better job to say that there are lots of different kinds of careers you can have in finance and in the wealth management and asset management space in particular. It I feel is very aligned with what a lot of people want to do kind of personally as well as professionally. And I think the other thing that sort of I was remind people of is that finance isn't just one thing. Like it's not just portfolio management, right? It's marketing, it's sales, it's compliance, it's operations, it's portfolio management, of course. So almost no matter what your kind of skills interests are, you can find some way to be in this industry.
So maybe one last question to wrap up this part of the conversation. But yeah, whilst doing research for this episode, I did read that women leaders bring different strengths to finance, such as more risk awareness, more collaboration, and more long term thinking. Um,
Mhm.
do you think women bring a different leadership approach to finance? And if so, how has that played a role in your career specifically?
Yeah. So I guess the first thing I would say is while it's convenient to say that certain kinds of attributes are more, female and certain kinds of attributes are more male, I think it's a much more nuanced picture than that. And honestly, one of the biggest pieces of advice I got earlier in my career is that I was being too assertive and too aggressive. And so maybe my style was more in the masculine style at the time versus in the feminine style. But I think this idea of empathy is another one that I want to talk about here because that's another one that I've worked on throughout my career is like really taking a genuine interest in people and understanding where they're coming from and taking the time to listen and taking the time to get to know people as people. And oftentimes when we're in the heat of the moment or we're doing the job, it's all about the job. But if you don't have those relationships and people don't trust you, they might do the job, but they're gonna just do the job, right? And what we really need in this environment is we need people to be taking care of their own part of the situation, but also thinking more broadly and being willing to jump and we use the sort of term like run towards the fire, run towards the crisis. And so I think leadership that um, engenders that trust because there is a sense that like you really do care about me and what I'm feeling and how I want to be successful, that goes a long way in having people show up and do their best work when those moments require it. So, yes, those attributes often are associated with more feminine characteristics. But I think all leaders, and I've worked for men and women throughout my career, and the best ones of them, the ones that I responded to the most, were those that I felt genuinely had my interests at heart.
Yeah, it's true that we have this tendency to generalize. I fully agree with
Yeah.
you. Sometimes it's a little bit too simplistic, but I love that color that you provided. Thanks for that,
Yeah.
and for the honest answers. So, leaving this topic aside, and maybe now talking about your job as a CIO in terms of asset allocation, particularly now in an era of uncertainty, um, I'd like to ask you a few questions. And before that, something that I should have mentioned maybe earlier in this conversation is that one of the reasons why we're talking today is because the CFA Institute kindly made an introduction because you and I are both going to be
Yeah.
at the CFA Live Summit that is going to take place between the 4th till the 7th of May in Chicago. It's going to be absolutely amazing. There's going to be over 1,200 finance professionals talking about some of the biggest topics that shape the industry at the moment. Lori specifically has a very interesting panel discussion coming up called Navigating Investments Amid Market Maelstroms. You're going to be talking about volatility and how to deal with the current market dynamics. I will be there for sure. I wouldn't miss that for anything in the world. Um, and so basically, if you're working in the industry, if you're a finance professional and you want to meet some incredibly interesting people, make sure you come to Chicago. Lori is going to be there. I am going to be there. And there's going to be many other people. So check the event online and make sure to get some tickets. Um, and jumping into that asset allocation topic, there's something that I wanted to ask you about, which is this equation of managing risk versus chasing returns. How do you
Mhm.
think investors should think about balancing risk management with the need for returns? Because I have the feeling that more and more, particularly smaller investors, think
Yeah.
just about quick wins and they don't think enough about risk management.
Hey there, quick ad break. Do you work in the finance industry and have a genuinely interesting story to share? I'm always on the hunt for great guests who bring raw, unfiltered insights to the table. Or maybe you know someone with a story worth telling? Please put us in touch. You can reach out to me directly via LinkedIn. I'd love to hear from you. And now, back to the show.
Yeah. No, so I think that this is a critical topic. And from where I sit, you should always be thinking about the risk that you're taking on to achieve those returns. So that doesn't mean you shouldn't chase returns, but do it eyes wide open. And we've seen, or I've seen lots of examples throughout my career of things that sounded too good to be true and were, so putting that risk lens on. And I guess when we work with our clients, there are kind of three levels at which that risk awareness operates. Like, so the first is at the multi-asset class level, the total portfolio level, right? What's your total risk tolerance, or what do you think that risk tolerance is, and how do you put all the pieces together so that you get something that approximates that total risk tolerance? And you can't just look at risk through the lens of volatility. That's certainly an important measure and one that we use all the time, but also drawdown risk, right? So lots of people forget that 3 and 4 and 5 standard deviation events happen. And so they focus just on kind of the sort of standard deviation, but they don't necessarily think about what that might mean in a protracted bear market scenario where you could literally lose 50% of your assets or something of that nature. So that's the first thing that we often do. And there are lots of ways you can manage that, right? You can certainly manage it by the proportion of risky assets you put in the portfolio. You can add diversifiers. You can use sometimes tail risk hedging strategies. There are lots of things you can do at that level. Increasingly, I think people are waking up to the idea that even within the asset classes, there are lots of things you can do to manage volatility. So over the last couple of years, if you look at the S&P 500, for example, it got highly concentrated. And so no surprise, if those high flying stocks take a bit of a tumble, it's going to bring the index down disproportionately. So, we've been talking to clients about, do you look at things like equal weighted? Do you look at things that are maybe not quite so concentrated? So custom indexes that maybe are a little bit less concentrated. Do you look at things that might be a little bit out of favor where the valuation's more attractive? So value stocks, quality stocks, things of that nature. So within the asset class, being a little bit more attuned. But then the third one, it's a lot more nuanced, but what sometimes clients don't realize is that their particular situation carries outsized risk factors. And the really obvious example of this is a defined benefit plan, where it's the assets and the liabilities, and the liabilities change based on interest rates. And so if the interest rates fall, the liabilities go up because the price relationship is inverse to the yield, right? So you could have a very strong market if you're a defined benefit plan manager and interest rates fall. And this was an issue we ran into a few years ago when rates were at zero. And suddenly your liabilities have ballooned. And so your funded ratio is terrible. So, this idea of asset liability matching, which is different from risk in terms of volatility or drawdown, that's the most important risk to them. And there are lots of other examples that I could give you where the specific circumstances of the client need to be factored in because they will capture other kinds of risks that need to be managed that aren't obvious through the traditional metrics.
Another question that I wanted to pick up your brains, like, given that we only have a few more minutes left, is the topic of liquidity. I'm a fixed
Mm.
income person, and we tend to
Mhm.
say that liquidity is one of those things no one talks about until it becomes literally the only thing that everyone talks
Yeah,
about.
yeah.
Um, how should investors think about liquidity when designing a portfolio?
Yeah. No, that's actually a great segue because if I just pick up on the theme that I was just talking about, liquidity is one of those risks that oftentimes people give short shrift to, right? So we've seen market meltdowns where suddenly investors sold what they could. So it was sort of counterintuitive that you'd say, well, geez, the crisis was happening in emerging markets, but all the outflows are coming from large cap US equity. Because guess what? That's what people could sell at a price they wanted to sell it at, right? So I think this vector of, especially as I add more exotic, stylized, illiquid alternatives, pick your favorite name. As I add those things to the portfolio, you have to always be focused on, okay, so what does that do to my liquidity profile? And oh, by the way, if you've got a long time horizon, if you're a perpetual investor, fantastic. Like you might not even care about that. But the other side of it is maybe you're a perpetual investor, but you still could have capital calls for some reason, right? You're a pension plan, you've got to make distributions. You're an institutional endowment. And guess what? You just got called for more capital into another private equity commitment that you made 2 years ago, right? So understanding what your liquidity buffers might be is another critically important part of investing.
That's a great answer. Thanks for that. And to wrap up this part of the conversation, maybe looking at the future. I mean, there's many structural shifts happening at the moment in the asset management industry. You have demographics, monetary policy changes, geopolitics, technological advancements that we talked about. So asset allocation and asset management is evolving. What do you see as the next big shift in asset allocation and the finance industry really in general over the
Yeah.
next few years?
Yeah. Yeah. Look, I think it's going to be a really let's call it exciting.
Mm.
I'll use the word exciting time. I mean, there are some of the themes we've already talked about, right? Which is this customization, increased customization at scale, democratization of investing enabled by blockchain and or other technologies that'll bring more and more exotic parts of the market to the hands of investors. Rise of ETFs as a delivery vehicle. I mean, that day has arrived, and I think that will continue to be a big theme. But I guess the other thing that we sort of play around with, and I'll come back to the blockchain. Um, there's an opportunity there for that to be really game changing, and I'll sort of backtrack a bit. When I was early in my career, was sort of the dawn of the asset backed securities
Mhm.
market, right? So before that, you didn't really have securitization of auto receivables or other kinds of instruments, and suddenly a whole asset class was born, right? Um, Blockchain, in theory, gives you the ability to securitize anything that has a value or a cash flow can be securitized. And we've seen some of this in terms of like you know um labels selling off their record assets or artists selling off their assets. So it's a kind of intellectual property. But take that to an extreme, right? Anything that you could kind of value in theory could become an asset class. So I think over the next decade or so, it'll be interesting to see if some new things spawn that didn't even exist, a decade ago, that now suddenly are investable and play a role in a portfolio. And then the last thing that I would say from a kind of what's on the horizon sort of, vantage point is that I do think that this marriage of technology and person, right? So that whether it's through AI or other things, it will empower investors in ways that perhaps they've not been empowered before. And so the role of people like myself and asset managers is going to change a lot. Like it's going to have to be a lot more engaged, understanding what you're trying to do, being advisory, and the how we do it. Not that it won't be important, it'll still be important, but it'll be that sort of cold face of, "Let's talk about what you're really trying to accomplish and how you're going to go about that," that will be critical, and that will change the nature of our business.
And I think that's an excellent way of wrapping the conversation. Use technology to empower yourself, your organization, and everyone around you to make better decisions overall and become better professionals. Lori, it's been absolutely amazing to have you on the show. Thank you so much for sharing all those insights.
My pleasure.
I'm really looking forward to meet you in Chicago, and I hope the next 41 years in the finance industry are as successful as the previous 41 that you had. Very well done.
Thank you.
The
Thank
Blunt
you very
Dollar
much.
is written, produced, hosted, and edited by me, Ignacio Ramirez. Everything you hear, concept, script, sound design, and production comes straight from my desk, and occasionally my kitchen table. Thank you so much for listening, and join me in the next episode of The Blunt Dollar for more raw, honest finance conversations.